I'm Greg Hunter. Welcome to USAWatchdog.com. With us, somebody we haven't had on in a while. He's used to making big calls on big trends, and you can see his calls and his track record on his wonderful site. It's trendsjournal.com. We're talking about the publisher of the Trends Journal, Gerald Celente. Gerald Celente, thank you for joining us today on USA Watchdog from New York State.
Hey, it's always great being on with you, Greg.
I've got to start with the economy. That's one of the big trends. Even I, and not a trends researcher, know that it's a huge trend. The economy is where we've never, what's happening has never happened before, according to several people I've talked to, probably including yourself. But Alan Greenspan was out last week, and he was warning of a bond bubble. And you have made a big call a few weeks ago saying the market blows up before the end of the year. Could you elaborate on why you made that call and where you stand with that call right now and how it's unfolding?
It's very simple. You have a global slowdown, and this is after central banks around the world have pumped in trillions of dollars, yen, yuan, euros, and you name it, into propping it up after the panic of '08 hit. We're in unprecedented territory. This has never happened before in the history of the world, part one or part two. Let's go back. The markets start collapsing in 2008. What do? They make up something new called quantitative easing. We're going to dump trillions of dollars, and it's going to be absorbed throughout the world because the dollar is very cheap. We're going to keep pushing this stuff out there so all these emerging markets could borrow money. And then we're going to be China, and our economy's going down. We're going to do even more quantitative easing. We'll call it something else in a Chinese name than the Americans are doing. And then you have another country over there called Japan. Hey, things are bad? Don't worry about it. I got it, Greg. We're going to make up a stupid, ignorant story that makes absolutely no sense, and then after we sell it in Japan, we're going to shove it down the throats of everybody else. Here's the story. Inflation is very low. Deflation is very bad. Because if people know that we have deflation in our country, they're going to wait, and they're not going to buy things because they know the prices are going to go lower. So what we're going to do is we're going to make up something with a BS name called Abenomics. And Abenomics is going to put more money into the system when you compare it, the GDPs to America. Now remember, this is the world's third largest economy. 3 times greater. And we're going to tell the big lie that these record inflows of cash, while we're driving down our yen, are going to somehow boost consumer spending. Because if the consumer believes that prices are going to go up, then they're going to hurry up and go buy stuff. Who can make up such a dumb story like that? And they sold it. They kept selling it. Then you have record low interest rates. When you and I were young men, they used to have a thing called savings accounts, where people used to actually put extra money in the bank and get interest on it that was greater than the rate of inflation. And once upon a time, they used to retire in Florida. We don't have that anymore. We have record low interest rates, quantitative easing. Let's add it up real quick. You know as well as I do, and everybody listening to your show, because they're smart people and they're tuned in, know that the only reason the equity markets have gone up is all of this cheap dough, borrowing it for nothing, stock buybacks, and merger and acquisition activity greater than it was in 2007 at this level. So now, you have crashing commodity prices. How come? Iron ore, copper, coal, aluminum, nickel, corn, palm oil. Go down the list. Your commodity price levels now are at their worst level since they were in the beginning of 2002. And for anybody that was awake back then, they'll remember America was just getting out of a recession of 2001. You have crashing commodity prices because people have no money. The jobs stink. They're not consuming. China's exports are down. The last month, they were down over 8%. You're looking at one piece of data after another coming out of China, whether it's their sinking Shanghai, whether it's their housing market declining, the bubble has burst. You look at their purchasing managers index. You look at every piece of information from the world's second largest economy and a great consumer of over 50% of all of those raw materials I was mentioning. Now they're not consuming them anymore. You have a global slowdown in commodity prices are plunging, and then you tie another level on top of it. Crashing currency prices. It's not only the yuan that they devalued, that was a small one. Take a trip over to Brazil. It's only down about 37%. Hey, Canada's not that far away from us, is it? No, right over the border. Take a look at their currency. Oh, yeah, it's down to 2004 levels. Hey, how about go south of the border, down Mexico way? Look at the peso. It's at record lows when they revalued it in 1994. You're seeing currencies crashing, commodities crashing around the world. How could anybody not see this coming?
Ben Bernanke is talking about this bond market crash, which when I saw that, I thought, Celente had this on, he was warning it weeks ago that market's going to, matter of fact, that's your call, that the market's going to crash. What do you think the crash looks like? When we start seeing a real crash, what does it look like to the man on the street?
It's going to look, now, this is also very important, Greg. Here we are, what is it, next to last Sunday of the month, in August. A time normally when trading volume is very thin in the markets. Not now. It's really heavy. It's like at 18-month heavies. What's it going to look like to the man on the street? You're going to see more lost jobs. You're going to see more foreclosures. You're going to see higher unemployment and, unfortunately, more social unrest. As trend forecasters, we look at over 300 different trend categories, making connections between different fields. When all else fails, they take you to war. This is an old movie. You used to see John Wayne play in it. It's called World War II. Currency wars, commodity wars, trade wars, world wars. It's playing out again. You're seeing already how they're talking about China devaluing their yuan. What they're leaving out of the story is the Chinese yuan increased against the dollar by about 10% in 2015. So yes, they're devaluing it, but here's the other important element of it. They could devalue it all they want. A cheaper currency does not mean you're going to export more. Those days are gone because so many of the products being manufactured come from different countries. It's not like everybody's making the same stuff that they're producing at home. They're buying parts from all over the world. It's a different setup now. To make the case, I mentioned iron ore. A ton of iron ore in 2011, when it was at its peak, was going for about $191 a ton. Now it's between $50 and $60.
Oh.
Okay? Now you're Brazil. You just saw your currency devalue 37% against the dollar. Are you exporting more? No. Brazil's in a recession. Oh, talk about social unrest. A couple of million people just hit the streets a Sunday ago. You want to see more civil unrest? Why don't you go to Venezuela? You don't like that? Take a trip to Colombia. That's where it's going to hit next. Go to Chile. I got a deal for you, Greg. You want some nice luxury office space? We got a brand new building over here that we built at the height of the copper boom that's totally vacant. I could get you a good deal on some nice office space. Go around the world, from Angola to Ghana, from Nigeria to Russia. You have recessions and depressions. Russia's GDP last quarter down 4.6%. What are we looking at oil prices? West Texas crude now floating under $40. Go back up to Canada. Hey, those tar sands, over half of them, just to break even, you need over $45.
What do you think about gold? Gold has been on a bit of a tear. Some people like Harry Dent, who's a smart guy. He's been saying gold's going to come down since 2011, but all of a sudden it's found a floor, and, it looks like gold and silver may be heading up. Why? Why are they buying? The smart people know it's manipulated. You have to be an imbecile not to. Why are money people buying gold and silver, physical gold and silver now, when we're talking about this your big global slowdown? What are they doing that for?
Again, we've been writing about this in detail. And first of all, how dare you say it's manipulated? Just because they manipulate the $5.3 trillion a day Forex market, the currency markets, just because they rig the LIBOR rates, the interest rates? How can you say they would rig gold? Oh, and by the way, Greg, here in the USSA, 6 banks, convicted of felonies for rigging both of them. Not one head of the white shoe boys on Wall Street rolls.
It's sickening.
They've got to keep gold prices down because I'm talking to you about all of the currency devaluations. So here's the...
Go ahead, but why is it going up, though?
Here's the deal. It's a safe haven commodity. It's different than the rest. And that's why we buy it. We never bought gold, and I don't give financial advice, speaking for myself. We never bought gold because of inflation. We bought it because of currency devaluations. I'll make a case for you. I mentioned about the Brazilian real down 37% against the dollar in a year. Gold is based on dollars, right? You own real, you just lost 37% of your value. What if you had gold? That gold was based on dollars. You think you're coming out ahead?
Yeah.
That's why gold is going up, because you're seeing currency crashes around the world. You're seeing markets unraveling, and people don't want to admit it. I want to read you something. This came from CNBC this past Thursday, when the market shed what? Was that over 360 points? The market just closes, and they bring on one of their top analysts. I'm not going to mention his name. Here's what he said. I'll tell you what's frustrating to everybody. So now we're included in the everybody. What exactly has changed in the last 48 hours in the world to see this kind of little mini collapse? Let's call it a collapse in the marketplace. I'm baffled by it. I get up this morning at 5:30 a.m., China's way down. I say, ooh, your open is lousy. The futures are lousy. I send out a note. Anybody know what's going on? Can you give me a specific reason? Nobody gives me a reason. Just a vague sense of, it goes like this, gloom and doom. And I'm tired of these people calling people like me gloom and doomers because we don't buy their fairy tale. Let me continue. China's weak. Brazil's down. Global markets. This vague, we fear, that has been gripping the markets for the last several weeks suddenly manifested itself noticeably in a little sell-off today. That's how they're looking at it. You can't see the currency crash. You can't see the commodity crash. You can't see a global slowdown. You can't add up 1 and 1.
Well, then, if you're a gloom and doomer, then you're in good company, because the IMF warned in June, and I had Bill Holter on to talk about this, about how the next crash, they're not going to be able to do anything about it. They're out of ammunition. You had Ben Bernanke out last week talking about a bond market crash, and interest rates could spike up. And also a Fed Vice President, Williamson, hey, QE didn't work, it was a mistake. What do you make of Ben Bernanke saying that if the bond market crashes, interest rates could spike? What do you think about that? This is not that QE. Alan Greenspan. Alan Greenspan saying if the bond market, crashes and it's in a bubble, interest rates could spike up. What do you make of that?
He's right. You know, this whole thing is one big Ponzi scheme. Anything could happen. Anything. And what's important about it is that even the Wall Street Journal a week ago came out with a front page story that the Fed used up all its ammunition. They have nothing left to do. They have record low interest rates, but I disagree with them. I believe they'll come out with another round of quantitative easing. They will do anything they can. It looks pretty sure now that they're not going to raise interest rates in September. And even if they did, what are we talking about? 25 basis points? What is going to create jobs? The jobs they're creating stink. Here's a number for you. Median household income is 6% below where it was in the United States in 1990. Look at the new home sale numbers that just came out. New home sale buyers, first-time buyers, it's usually around 40% in good times. It's down to 28% now. Look at the amount of people that own homes. They're back to 1960 levels. Look at the labor force participation rate. It's back to the late 1970s. That's when women just started flooding into the workforce. We're back to those levels. There is no recovery. It's been a cover-up. And Greenspan is the guy that started it. Go back to the 90s with the bailout of long-term capital management. Go back to after 9/11 when Greenspan began to lower interest rates to 46-year lows. Greenspan, or is it Greenscam, is the guy that was the big bubble builder, and now he's blowing out hot air so he could pull himself away from it.
Yeah, I think he's trying to do some repair of his reputation. You're right. He's the one that started the parade. Bernanke got on the bandwagon, and so did Yellen. Do you think everything's lower except for gold and silver from here? Bond prices lower, stock market lower, unemployment, I guess, higher, gold prices, silver prices higher. What are you seeing the trend between now and the end of the year? I know you're saying big crash before the end of the year. Describe what you see with a big crash before the end of the year.
Oh, you're seeing it unfold now. Will it keep going? I mean, this could be just a blip. But I believe by the end of the year, you're going to see the equity markets down across the board more than 20%. And you look at the NASDAQ. It's well below 5,000. Let's put this in perspective. You know the last time the NASDAQ was at 5,000? In March of 2000, 15 years ago. I'm bullish on gold. I believe that when gold prices go up, they're going to spike up. I believe, and we've written this, we're on record, Greg, we believe that the bottom of gold was between 1,000 to 1,150 an ounce. That was the downside risk, because it doesn't pay to pull it out of the ground at any level lower than that. And it's not like oil, where these guys got to keep producing just to keep things going. You don't do it. So now, we believe that when gold prices go up, they're going to skyrocket up, and we're looking for gold to beat its 2011 level I think it was 1921 or 27. We believe it's going to go over 2,000 an ounce. We're not as bullish on silver because silver is used for production, and we don't see production increasing. So it's a manufacturing metal as well. However, having said that, it will not go down along with other raw materials. It will probably rise, but not at the pace we see gold is going, because gold, since the beginning of written history, has been looked upon as when all else fails, there's gold, and people are going to be hunting for a safe haven commodity when this all begins to collapse. And again, you're going to see riots in Brazil, more riots in Venezuela. I just got back from Europe, spending time in Italy. Migrants everywhere. Everywhere. Just to put this into perspective, Greg, it took from 100,000 years ago to 1900 to put 1.6 billion people on the planet. In a little over 100 years, we've added 5 billion people. Now, let's put the next layer on. You got a war in Libya, a war in Syria, a war in Iraq, and a war in Afghanistan, a war in Yemen. You have destabilization from Mali to Congo, to Central Africa, to Sudan, to Somalia, to Burundi. They're flooding out into Europe. There is no way of stopping this wave, because then you put the other level on it. Besides the wars, you have crashing commodity prices that were holding these countries together as they were exporting it to China when China was manufacturing, when the Americans and the Europeans were buying. Take a look over in Australia. You're looking at the Aussie dollar down over 20%. Look at their commodity exports. Look at New Zealand. Look, there's one, dairy products, milk. It's down like 40, 50% year to date on exports. So what you're looking at is a crisis coming from many different levels, from economy to geopolitics to civil wars to regional wars and social unrest.
Do you think the U.S. gets into a war with China or Russia or both?
You know, there are madmen in charge. What we're doing, by the way, on September 20th, right here in Colonial Kingston.
Yeah, I wanted to get to that.
Yeah, we're launching Occupy Peace.
Yes.
And it's to bring home the troops to honor the founding fathers, beginning with George Washington. A real warrior, not these boys that play golf, shoot pool, and play basketball and call themselves commander-in-chief. His farewell address, no foreign entanglements. And the world was a big-time war back then. England and France, Napoleon later marching to Russia, Franklin, Adams, Jefferson, every one of them. So what Occupy Peace is to stop this march to war that we see coming. Currency wars, commodity wars, trade wars, world wars. Close the bases, secure the homeland, put the troops to work rebuilding America's rotted infrastructure, dilapidated cities. Use the money to rebuild the country. And here's something really important, Greg. Congress has not voted to go to war since World War II. We're going to demand that Congress vote. And one other little caveat, we want to have on each state referendum a ballot or referendum that will tell Congress how to vote. Yes or no, because we pay for the war with our money or our lives. Yes, we will have, if the president needs immediate action, if we're attacked, of course, the game changes. But absent of that, it's Libya, it's Iraq, it's Afghanistan, it's killing us, and more to come.
Gerald Celente, I know you've just, I read your midterm trends journal. There's a lot of detail in there. We've just skimmed the surface. Thank you for skimming the surface. If people want to get your fine publication, it's trendsjournal.com. You, of course, are the publisher of the Trends Journal, one of the top trend researchers in the country. Your record is sterling, and it's out there for people to see. Your calls are out there. Gerald Celente from trendsjournal.com. Thank you for joining us today on USA Watchdog.
Oh, Greg, it's always great being on with you. Thank you so much.